So let's discuss this before we go to the main stuff. This very one, it's really important so that you can have a clue of what we are to expect. So we've seen that this market was bearish to the downside. This market right here, it was bearish to the downside because we have a low right here, we have a higher low, and we have a lower low. So what happened is this market break structure right here to the downside, and it gives a push right here. You know quite all right, this push supposed to come to this zone, but that did not happen. So it gives a push right here. It retraces back down. It gives another push, trying its best to still come to either IMB, imbalance, or an OB. But still yet it couldn't. It comes back down again. The market comes back down again, it gives another leg, then it pushed again to the upside. This was the time that this market was able to push this market to the upside. And this very upside that this market pushed into, this very demand zone, this very supply zone, which this market pushed into was an unmitigated demand supply. It was unmitigated supply zone. This is not demand, it's a supply. So it was unmitigated supply zone. So after which this market successfully pushed into that zone, you should take a clear look of what this market did before. It gives a high, it gives another high, it becomes equal high. And whenever you see a liquidity graph setup, that kind of market tend to go massively. If it eventually goes in your direction, you are going to be making a lot out of it. So this market printed a high here and it printed another high here. The only thing you have to focus on is the liquidity itself. So I'm just trying to teach you guys liquidity graph setup here. So this is the first one I'm going to teach. Tomorrow I'm going to drop another one, maybe twice every day, so that you can get a clue of what I'm saying. So it printed a lower low, which is a lower high and a lower low. So this very area here becomes a consolidation. This box here becomes a consolidation, which is, they do call it support and resistance. And on support and resistance, you don't have to trade this, especially if you are a beginner. But this support and resistance is what beginner traders trade mostly. This is what they are exposed to whenever they come to this market at first, whereby this market will eventually takes them out and still comes back in, and still comes back and takes them out again. What do I mean? As this market break to the upside, they will be waiting right here for them to buy. This market will come back again and grab them away. So you should not be part of this kind of trade. You should wait for this liquidity to get taken. And once the liquidity is get taken, you have to look at the demand, the supply zone, which was not mitigated. It may be an imbalance or an OB. But if you are trading just an OB, it should be an OB which has an imbalance. That will give you, that is going to give you a high, you will be at the high point of you making profit in this market. So therefore, once this market comes back from this supply zone, once it comes down from the unmitigated supply zone, it's going to TP another unmitigated demand zone from below. So that is what this market is going to do. This is the buy, this is a sell scenario. Let us take the buy scenario. So if another thing is, if this market was not able to was not able to stop here. That is to say the liquidity was not enough for them. It may eventually tap into another supply zone up here, and it's going to still fall down, and then it's going to trigger unmitigated demand zone. So let us take a look of a buy scenario before we go to our chart and see how we are going to implement it step by step. So on our buy entry, buy setup, you see that this market was bull. The market was bullish to the upside right here, because the market created a low, it creates a higher high. This was a lower, a higher low, a higher high, a higher low, and a higher high. But what happened? The market was trying to come to this zone. What happened is this market pushes back up. It wasn't able to come to this demand zone. This is unmitigated demand zone. Make sure that your zone is a virgin zone. No market has entered to the zone. That virgin zone must gives you, not must, 80% of time is going to give you what you want. 80% of the time, it is going to give you what you want. So you shouldn't go with a zone that has been used multiple times, because it may break your trust. So a zone that is unmitigated is something you should go for. So you see that this market created, see, it was a higher low here, then a higher high right here. This very point, it's another liquidity entry. That is to say, the market must surely take out this high, and then once it take out that high, it's going to trigger the unmitigated supply zone. So this market pushes up, it push down, it pushes up, it push down. But look at the low. What are you seeing? You see lower lows here. You see two lower lows. At times they call it double bottom. So you see a double bottom right here, and you see a double top right here. But what you are interested on is this double bottom, because you are looking for a buy setup. So you just want the market, to come back and pull out all these liquidities. Once they pull out these liquidities, they are going to add to their initial money. Their capital right now is going to be heavy. So once they trigger this zone, they will have enough buying power for them to buy this market up to the upside, and you are going to make a lot of profit. So this is how you are going to trade this liquidity setup. If this is your first time on this channel, I'm Aqua FX. I make sure I drop tradable and profitable trading strategy on this channel. I also share both my win and my loss on this channel. So if you want to join our free Telegram channel, feel free. If you have any questions, you feel free to ask. So let me share my screen with you so that we can see how to do it on the main chart, so that whenever you see it on the chart, you'll be able to do that yourself. Let's get to the chart. So right here, I'm on my daily chart. So first, let's mark our structure in this market. Let us mark our structure. So we've seen that we've seen that the market right at this point was breaking structure to the upside right here. We've seen this market breaking structure to the upside. So I'm starting with my daily chart. You guys know I like using daily chart whenever I want to take trade. I like using daily chart. So for you to trade this pattern, very easy. It may be a double bottom, it may be a trend line. You know, liquidity comes in different form. So now we have to do our we have to mark our structure like we do our top-down analysis. So right here, we've seen this market right here breaking structure to the upside. And now we've gotten our structure. We've gotten our trend, that the trend of this market is bullish. So the trend first. Once you know the trend, then you map out your zone. Once you map out your zone, then you go lower, search for your liquidity. You go lower again, search for your liquidity. If you want to use 3 time frames based on your entry criteria, you can do that. So now I've marked out I've known my trend. So let me scale out my structure, my zone. So my zone becomes this very one right here. Here is my entire zone. So will I just take a trade once market come into this zone? This is my daily chart. So for this, I will not like to stay here and take my trade. So let me move down to 2-hour chart. This is how you can do your top-down analysis. You map out your liquidity, then you know your entry, the next step, and this will give you massive RR. I'm starting from daily. So let's go to 4-hour. Let us go to 4-hour together. So here on my 4-hour chart, we have 2 zones. Here on my 4-hour, we have 2 zones. But the zone that really led to this break of structure, because here on my 4-hour, I have another zone right here. On my 4-hour, I have another zone right here. You see the daily zone. Here was the daily supply, and here is my 4-hour supply. So inside this 4-hour supply, there is a zone. So I've gotten a zone right here. Inside this 4-hour supply, I've gotten a zone right here. The last bearish candle before the up move. So I've gotten a zone right there. And I also have another zone right here. But I should be concentrate on we have 2 zones. We have 2 zones. So you have to keep your eye on this zone. So let us move to let me change the color of the daily zone. Let me change the color of the daily zone. Okay. So let's move to my 2-hour chart. You can do this with your M15. You can do it with your H1. But I have to use daily because daily chart are stronger. Bigger time frames are stronger, like H4 daily, they are stronger. So let's go to 2-hour and see. I don't think I'm going to go down to M15. I may stop on H1. So let's just see how it goes. So on my 2-hour, this zone is still the one we have here, and this very zone is still active. The 2 zones are still very much active. So let's move to my 1-hour chart. Let's move to 1-hour. We are still trying our best to see how we can take trade on this zone. So looking at the 1 hour, you can see how heavy is this candle. This candle is up to this stage, the last bearish candle before the up move. The last bearish candle before the up move. Don't know if you guys understand this my candle based on its rate and what. So it is the last bearish candle before the up move, which is this very green candle that you guys see. It's a bear candle. It depends on how I set this chart. This one, it's a bear candle. So that is the candle that I just marked. Then looking at this one at the zone, still the last bearish candle before the up move. So these two zones are together because this is the last bearish candle as well before the up move. Okay, it is this one. We have this one here, this one. Okay, we have that one. You know, we had two zones on our H4. H4 tells us that we have two zones. So that is what we have. We have those two zones. Here on my 1 hour, I should be looking for entry because I do not want to go down to a 30 minutes or N15. So right now, you see that this market come into this zone. You have two things for you to take a trade, either a market structure or an engulfing candle. What is an engulfing candle? For those of you who don't know, an engulfing candle is a bear candle followed by a green candle that engulfs, that is longer than the bear candle. And it happens to be this very candle right here. Happens to be this very one right here. And another entry criteria is the one, once this market come into it, you look a shift. Once the market come into it, you look for a shift in market structure. Then upon retesting that OB, you take your trade to the upside. So these are the two things you are looking for. So upon that market coming into this OB right here, you buy to the upside. So right, I do not really like using candlestick. I do not really like using a candlestick. So I like using a shift in market structure, then I buy. So let's mark our shift in market structure. Let us mark our structure. So we see that this market was bear. The market was bear, pulling back bear to the upside. It was bear. Then what happened? The market suddenly breaks above this very high here. It closes above this very high. So as this market closes above this very high, where will be your entry? Your entry has to be this very zone. Your entry has to be this very zone. Here is supposed to be your entry. But what happened is you will not just take a trade blindly. You won't take a trade blindly. You won't take a trade blindly. Like I said, I do mention of liquidity. I said the trend. Once you found your trend, then you should mark your OB. Then the third thing you should do is for you to look for liquidity. Then your entry is the last thing to do, because liquidity will help you to know quite all right, this zone you are going to take a trade, it's a nice zone and the volume is going to be a payoff. So let's go back to our 2-hour chart. So right here on our 2-hour chart, here was the daily chart. Here was the daily chart. And you see that before this market was able to break this daily high, before this market was able to close above this daily high, we have a structure right here. The market give a structure. The market give a structure right here. Like I said something on my previous video, that if market did not come into a demand zone, so like I said, if a structure does not come to the base, it did not come to the bigger time frame demand, you shouldn't take a trade. So what happened? This demand here, it's a liquidity for you. You will not take that trade. So this market prints another liquidity again right here. You still ignore it, you won't take the trade. It's just pushing it upside down. The market again, it still prints a low here. You will not take the trade. You still observing. The market again print another wick here. How many wicks do you see? You see 1, 2, 3. If you want to join all the wicks together, it's either you have equal lows or you have a trend line. So since this is a buy scenario, you are looking for a double bottom, not a double top, double bottom. So right here you have a trend line liquidity. There's a trend line liquidity right here. So you are expecting this market to come and take out those liquidities. Once it take out those liquidities, it's going to tap into the OB that you marked, which happens to be this very OB right here. As it tap in, that is when you are going to look for an entry criteria. You have to move down to your M15, 30-minute or H1. For the sake of this tutorial, I have to stop at H1 and take my trade to the upside. So let us go back to our H1 and see what was our. I don't want to go to 30 minutes charts. I don't want to go to 15 minutes because I do not want the video to be too long. So let's go back to our H1. Let's enter our trade and we are to target the previous high or above. So here is our entry. As the market come into this zone, it gives you the reason for you to take this trade to the upside, which happens to be this OB, which I showed to you, this OB. Then this OB was very, very valid because this OB gives you, it also prints an imbalance in this zone. What is our imbalance? We have our imbalance, which is right here. So therefore, as this market printed the OB, you can now take a trade because it completes imbalance OB. So you take your trade. If you move down to a smaller time frame, you are going to have a bigger RR. But for the sake of this tutorial, I will just stop here and let's take our trade to the upside. So I'll place my trade and my stop loss has to come a bit below this very zone. It has to come below this very zone and I'm going to TP above liquidity. I'm going to TP above liquidity and this is the above liquidity. This here is the above liquidity. That's supposed not to be your TP. Your TP is supposed to be the bigger time frame high, but I do not want to go for that. So we just end our trade there. Only this one trade right here give us 1:10 RR, more than 1:10 RR before it pull back down. So I hope you learned something. This is very detailed. If you have any question, feel free to ask. If you have any question, feel free to ask. I remain Afua FX as I sign out. Peace.